All right, I hope everyone's doing good tonight. The topic is going to be about letting go of hopium. And for the people that don't really understand like hopium, it's basically the hope of having a more successful outcome than what seems logical or basically what you see in front of you on the charts, or just thinking from a clear, stable mindset. You understand logic over hope or hopium, like the idea of making huge returns in a day. I'm going to basically just be talking about the whole purpose of this, how to avoid the idea of trying to change your whole life in one day with trading, and just hoping, like I'm going to keep saying this word, trying to make your whole life just in the snap of one finger, one trade, everything's fine. I know a lot of people, that's like the dream to hit huge. And the good thing about this lesson, it fell on a day where the market ran like crazy. So I know for a fact, no one caught the whole move. If you did, congrats, withdrawal. But end of the day, there's no such thing as I nailed that whole trade from like start to finish for days like today, where it's just straight green, trends all the way until like the last 30 minutes. And then we have like that sell off, end of the day close. People chase calls, get destroyed because they miss the entire move up, whatever the case may be. I'm just going to try and I want to do like a Q&A. I also want to speak on my personal thoughts on this. And I want you guys to try and interact as much as possible, ask questions. And if today this was one of those examples of like, I wish I would have held my contract. I wish I would have done this. And I know Perez was just talking about that a few minutes ago. I just want you guys to understand everyone has this kind of mindset at some point. Some people still have it. There's some days I look and I'm like, man, I wish I would have even traded today. I traded open with I caught the fake push we had on QQQ. I caught the puts on the top wick on the 15 minutes, literally sold at the bottom of the day before the run up. And the biggest example I can use for like my trade today, and I'm going to actually switch over to the chart just to give you a visual for you guys that may not know what Q did today. So literally I was watching, and if you guys were here Sunday for the charting, you'll know why I put this level here. It was a heavy support based off historical analysis. So once we broke underneath with price action, I was waiting for a 15-minute candle. For those of you that know, I don't like entering trades or looking at trades on the 5-minute, the 2-minute. I'm looking for like the larger picture. So right when this 15-minute candle went into this highlight, I got my puts. I got Friday expiration. I sized in light, and I literally rode this all the way down. And I didn't sell at the bottom of this 15-minute red candle, but it was roughly around like the low on the day I'd open that little wick around 358.77. Using this example, and I'm honestly very happy and blessed that this happened today, because I don't trade open. You guys should know that. And also, this comes in good sequence with what I'm going to be talking about today with the topic and everything else that may follow up with questions and or comments you guys have. A lot of people, when they enter trades, no matter what time of the day it is, open, intraday, end of the day, they always, if you enter good or if you enter slightly good, you're red for a little bit, but you go back to green. So many people, they get up 30%, 40%, 50%, and they don't want to sell. They're focused on, if I like everything's looking very bearish, like for my example with my position today, when looking at the only 15-minute candle that happened in the first 4 candles, this big red one, I literally entered around the top in this the orange highlight for the basically the zone I was looking for a rejection to get my entry point. I could have held this and just thought to myself, this is going to keep tanking. This candle's too big. Like the next candle has to keep coming down. I was up roughly 40-30% on this position, and I took profits only because, for one, I was up that much pretty quick. For having not the 0 DTE contract or even the day, like tomorrow expiration contract, I had Friday's expiration. So for me personally, what I've learned over my emotional standpoint the past few months to a year, if I'm taking an expiration that is farther out than usual, and I'm talking, let's say you're playing like a regular stock like Amazon, if you're on the same week expiration, that's kind of like the closest expiration you can get. So I'm focused on farther out expirations. So like for QQ, for SPX, for SPY, not 0 DTE and not next day expiration. I'm talking basically 3 days and later. As you add time, they move slower, so you're not risking as much, and you're also not going to make as much because the risk is low. The reward's also going to be low. The contract's not moving. So when I was up literally 35%, 40% in not even probably 15 minutes. Well, yeah, it wasn't even 15 because the candle's 15. So it was probably like 7 to 8 minutes, 10 minutes. I was already up a huge amount. And for me playing an expiration that was not zero DTE, I just understood I don't want to hold this. Like even if it consolidates, I can lose value. This heavy rejection, the IV's pumping, people are probably chasing the contract if they're looking at it. So I just took my position out. I took my profits, and that was my end of the day. I didn't look at the market the rest of the day. And the only reason I didn't is because for me personally, when I have a bearish mindset going in the open, when I don't trade open, it doesn't really matter going later into the day. But if I'm focused on, okay, this specific stock is in my zone, I'm going to trust the chart and not just enter blindly based off this has to reject. Like this is a huge green candle, it's going to come down, or vice versa. A huge green candle, I have to buy calls before it breaks out. I am a very logical, like what I see is what I interpret. I don't ever hope for anything. I don't ever anticipate more than what I deserve. And that's one reason why I would say I'm so successful now, because I trade from a logical standpoint. And that's one thing I never did. And that's why I would always hold positions when I was up 50%. They go back to red. I would hold a position up 100% because I only size one contract and I don't want to sell for 100% because what if it goes to like 200 plus? Everyone deals with this. And the only way that you can like overcome it, you just have to take profits and just deal with what you get, because long term, it's going to compound. I understand, like Perez, if you don't mind, like you can respond as I talk about this because you mentioned it earlier for the people that may want to like read the chat while we're talking. Perez was saying that he bought a contract for a 1.75 on SPX today, and he sold at 2.5. So right away, one contract, I get it's only $75 profit, but that is an amazing trade if your account is small. $75 on $1,000 account, that's 7.5% growth. I think from a logical standpoint, I think from a broad perspective. I don't know any bank that is giving anyone a yearly return of 7%, let alone 7% in a day. I understand, and he said this earlier, the contract ended up running to a high of like 27, and it closed, last I checked, it was, I think, 18 at the mid. Yeah, it was around 1850 at the mid. So it was over 1,000% close from where he entered. The hardest part about overcoming that hope, or like, oh, next time I enter and I'm up, I'm not going to sell because what if it runs like I missed the one day? The one time that you maybe oversize, the one time that you maybe like your head is just full, like the ego. Everyone knows what I mean when I say it, like you have an ego in a trade. You don't want to follow the chart. You may be red, but you're telling yourself there's no way that I'm going to lose. Like I just don't see it happening. Like I don't believe it. No one understands that like you're looking at a chart and that's all that's happening. I don't believe in the whole, I'm going to hold because it has to go. Well, why does it have to go? Show me a reasonable visual, like technical analysis. Show me the zone, show me the trend, show me why you think a gap can fill. Because the one time that you don't take profit, you're going to wish you did take profit. And then the next time you do take profit early at 30%, 40%, what if it goes to 500%? Then you're going to go right back to the whole idea of, I should have never sold early. Next time I get in this play, I'm going to hold and just hope that it goes back to what it should be. I have never met any trader, and of course, I'm not very social with all like the big time people that trade. I've never met anyone that hits 1,000% every day or 500% every single day. Like that's not a logical standpoint to look at. So if you're thinking that you have to be consistent with your percent gains over the consistency of just being green every day, you're not going to last. Like you can, but I've never seen someone last 3-4 years. Like everyone that I've helped, everyone I've been around in different discords before I got to where I am now, so many people are just not trading anymore. And you really think it's because they got bored or like this isn't for me. They don't have money. They don't have like the conscience to keep doing this and keep losing. And then they make a big win and they lose all that money again. It's mentally draining. Every time someone makes a huge profit gain, the first, like I tell this to everyone, show me where you're at in a month, withdraw your profits, do it again. No one really understands like that one big win I get in a moment. It feels like you just like everything's changing, like you're hype. This is like the turning point in your career. You can't trade like that every single time, and you're not going to get returns like that every single time. So when I'm focused on teaching this topic, I'm hoping to show you guys a few examples with like charts, and not just the idea of this is the mindset you need. You have to sell for wins. Like it doesn't matter if it's 40%, 10%, 5%. The whole purpose of trading is to make like financial freedom, not in a year, not in a week, but 20 years down the road, which it's hard for me to think that far ahead because I'm so huge on like, which people know this longevity for me is so important. Like having consistency years down the road. At any point, you can oversize and blow your whole account, which I'm sure everyone knows that. And I'm sure people have been through that. I've been through it multiple times, and you get tired of it. I'm not saying you get tired of losing. It's just you get tired of having to restart from the beginning, halfway through, small gains, small gains. You want to go for a big win. You want to oversize. And the one time you do it, you're right back to where you started 4 weeks ago. So you make 4 weeks of progress, and then one day you're back to where you were at square one. It's so mentally draining. So as I go through this, I'm basically just going to show charts. I'm going to show examples of like how you can work to make sure you may hold throughout the whole move. And I know that's going to be another topic at some point for the stuff that I'm teaching, but I want to show you guys like what we do. It's not hard. Then the reason it's not hard is because every trader that's profitable, we trade from a logical perspective. We don't trade for, I'm not selling until 300%. Like if we are only sized one contract, we're probably going to be selling that one contract at a small percent gain. And whatever happens after, we're not upset because we understand and comprehend. If I had more than one contract, I could let a runner go. I could let runners go, put a stop loss at break even after the first trim. When you have a small account, you can't just hope for these life-changing things to happen, because a lot of the time when you make $1,000 on a $500 account, you're going to size up, not realizing the trade you just had is probably still too much size for what you now have to work with. A $1,500 port, if you're trading with $500 total, that's a huge like portion of your account. And if you understand the risk, that's fine, but you also have to understand if it doesn't go the way you want it, it's mentally draining. It's not just your account is being drained, your mindset may be destroyed. And outside of that, it could affect your family life, your personal life, your mental health, the way you do things like day to day. And I've been there. Like I know how that feels. You don't want to talk to nobody. You're just like, you're shutting everything out because you just feel, I don't want to say stupid because I hate that word, but you just feel very ashamed of yourself because you neglected the rules that you should have been doing all along. Like you know how to make this work long term, but there's always that one day where it's like, and today's a good example. Let me switch to SPX real quick. Or let me go to SPY actually. SPY should be fine. You see moves like this, and as it's going, it's like I gotta buy in. I gotta buy in. If you buy in at any point, I understand it still went up higher, still went up higher. You're entering and telling yourself, I hope that this keeps going. There's no point of you saying, oh, consolidation here, I'm going to enter because logically we should push. This can easily reject. And if we go back to a few days ago, it's kind of surprising this didn't happen because we had a lot of rejections here. So this pushing, I understand like if this breaks out, it's going to send you more because this is like the breakout level. But end of the day, like when you play something like this, and a lot of people, they trade the 5 minute, the 1 minute. If you're on the 5 minute, you're entering and basically just hoping that these trends hold, which is totally acceptable. That's fine. But also realize you had a chance to enter here. You had a chance to enter right here on a pullback, but most people, when they see a pullback, they get scared. They don't want to enter calls. Could have entered here. Could have entered there. A lot of people probably entered right here end of the day and nothing happened. So as I'm speaking on this, I'm hoping like you guys, maybe you have like a story that you've had, like you can type up or just like agree with me as I talk or disagree and we can start a conversation. Everything that I do is literally what I've been through, and I'm hoping you guys have been through the same stuff. So it's more like relatable and not the idea of you're just hearing this for the first time. I'm pretty sure a lot of newer traders and also kind of experienced, not many mentors teach mental side of trading. And I wouldn't say it's an issue, but that's the main thing that I'm focused on is the mental side of trading, because anyone can learn technical analysis. Anyone can learn what the EMAs are, the VWAP. They can learn support, resistance. They can learn all this crap. If you can't sell in green, if you can't sell for a small loss because your risk for the trade has hit, none of the technical analysis matters. None of your charts matter. Mental mindset literally is what makes you like profitable long term. The minute that you size too heavy, you're going against your mindset of I have to be consistent. I have to trade the same every day because one loss could wipe me out. Just because the chart looks good literally doesn't mean anything, because the one time you're wrong oversizing, like you're taking 20 steps back. And I understand it's like, well, if it hits though, it's life changing. One important trade that changes your account size, if you try and do it again, which most people do, and I've been one of them before, you're going to be right back to where you were the day before, if not a few weeks before. So like, that's why I'm sure so many people that like join the academy for free, all they see is this bullcrap mindset teachings, all this like stuff that they don't care about. Those people literally need that long term. And if they think they have that, that's fine. But if you have the mindset, there's not much more to learn, because charts are charts. Zones, trends, EMAs, VWAP, whatever you use, that's all back testing. That's all stuff you have to do for yourself. Mental is literally, it can change any day if you're not conscious of what's happening. Your decisions, your outcome that you have while you're in a trade, the way you're thinking as it's moving. There's so many things people aren't focused on, because end of the day, it's like, I want to be green. I want to make a lot of money. I missed the main move. I got to chase it now because I can't keep sitting here and watching it. I think, I don't, is he in here? Who was the person there? I think it was All Eyes on Just Me. He DM'd me today. He just said he missed his initial play and he walked away from the monitor the rest of the day. He literally didn't watch stocks the rest of the day. That takes so much. Oh yeah, there he is. That takes so much to do. Like even I struggle with that. And I get the idea, like I work for this company, I have to be here just in case. Even before working for them, walking away after a green trade, a red trade, I was not able to do it because my whole thought process, what if a better move happens than what I just had and I miss it? But the focal point that I now have in like today's time, if I hit green, I don't have to trade. If I have $8,000 left in my account for buying power, I don't have to use half of that money. I don't have to use the entire 8,000 if I don't want to. So learning, just like not hoping for more money, because you can also lose and go back in the red, or if you're up 400 on the day, you trade again, now you're up 200. A lot of people, it's just like, I got to get back that 200 I just lost. They're not focused on the fact of you're still up $200. I mean, $200 in a day for trading, that's like working a 10-hour shift and they're paying you $20 an hour. Obviously, after taxes, whatever, you don't have that much. But think about like just the standard way that people are paid, like a 9 to 5. Don't look at charts and think I could turn $50 into 1,000 if I just would have done this. I'm going to try it next time. It's possible, but it's not going to happen every time. I mean, some stuff you may want to sell it 10.00. The high of the contract was like 9.1, and then it goes down to 7.0, and you don't want to sell yet. And then you're like, well, if it touches 9 again, I'll sell. Then it goes down to 5.0. Then you're thinking, okay, if it goes back to 6, I'll sell. You don't ever get content when you have a mindset goal, and it just slowly depreciates as time goes on, because you're readjusting to what you've seen and not you're readjusting to what you've seen and not what is actually happening. And that's where that hope comes from. Like, if it goes back to this, I'll sell. So you're hoping it goes back up. Like, what's the reason as to why it should go back up? Why is it actually selling off? Like, should you be looking to sell now and not risk losing even more money? CJ said, I took a SPY call for July 7th. There was a point where I was like, I got time, I can just hold it. And then I remembered that's the old mind state I used to have. I took the green, and if the opportunity is there tomorrow, I'll buy it again for less than what I sold it for. That's my newer mindset instead of holding. And that's perfect. It's so like, I'm speaking on this from experience, guys and girls that may be here too. There is so much that you like haven't even touched the surface on when it comes to trading. And I'm not talking stuff you can learn. You can't learn the stuff that I'm trying to teach. Like, mental comes down to your personality, how you look at life. Like, you want stuff now? Are you very patient? Everything goes full circle, and no one can teach you that. All they can do is throw things at you, and then you have to figure it out yourself. Like, what kind of person am I? Do I actually hope that trades go in one way, or do I actually play the chart? Do I hold in the green when I'm up 50%, knowing I should sell, but I want more? Like, you have to break down who you are. And there's not really any way for me to do that for you guys. Cause I mean, there's only 26 of you in here right now, but that would take a long time because knowing each person, everyone's different. Everyone has their own style. Everyone has their own, like, I don't want to say messed up mindset, but everyone wants something out of greed. Everyone has like that hopefulness of, I can make this happen with one solid trade. I'm over that. And if it happens, it happens. But the biggest thing to look at, if you're playing trends, you can hold the play based off trends. Like if something breaks below, if you're looking at the previous highs that happen, and that's if this breaks, I'll sell my contract. It's still holding, so I'm not selling. Once it breaks up higher, okay, if it breaks the previous higher high, I'll sell. Never came down, so you're not selling. You have to find a system. There's no such thing as I'm going to hold and just see if it keeps going. You can do that, but the minute this thing rejects or it pulls back, your contract's going to be toast. Because a lot of you may not understand, a slight pullback like this on SPX or SPY, I guarantee you the contract, if you would have played like an expiration of on SPY 436 call, this little drop probably made the contract cost the same amount that it did right here. Even though the chart is still holding, the contract's value is way lower due to that consolidation, that slight drop off. You have to think about other factors than just the hope and the idea of, I'm going to hold this, I'll be back in an hour, and I'll see what happens. If you can afford to lose that, that's fine. Like, everything comes down to your, like, I think you guys are starting to realize like how I'm talking about this. Everything comes down to you. I can't just tell you sell, because half the people that I help, like Coco is a good example. I wish he was in here so he could type back, but literally we'll be in a trade. This is like a year ago. We'll be in a trade, sell for 200%. It goes up to 600 total on the day. Obviously, it closes lower than where we sold at, but he would always say, bro, if we would have held, we could have made an extra 200%. It's like we sold for 200% gains. That is a massive return. You're focused on what could have been, not the fact of what we just did. So I'm always trying to find a way to make people realize there's more to it than just, okay, I'm gonna enter and we're holding. I'm just gonna let it go. How many times have you told yourself, I'm gonna let it go, and then sure enough, it comes back down, and you wish you would have sold for 50% gains. Now you're down 10%. Maybe you were up 150%. Now you're back to break even. There is no such thing as selling too early. And obviously, newer traders are like, oh well, if it's not like if there's no such thing as selling too early, how come I could have made an extra $1,000 when I only made 200? That is the idea of, you would have had to have held that and just hope that it kept going, unless there was like a solid chart set up, but you wouldn't have sold them for a small gain unless your fear of like, this could go red, I just want to get out now because I'm happy. We see too much massive gains on social and you think you aren't growing or making enough. Yeah, social media is one of the biggest mental breaks, I would say, for people, because a lot of people that promote on social media, and I honestly feel like Rippy Global is very big on not pushing stuff out like that. And we try and stand in on like proper sizing, proper trades. People that push out 1,000% gains and that's it. It's to draw the new people in that literally don't understand. Like, you can't make $10,000 if you have $50 in your account. Obviously, at the hit, like, what is that, 5,000% gains or whatever, it's possible, but there's almost no way it's going to happen for a new trader unless you just enter and never sell because you just don't know what the heck you're doing. Well said, man. I can't tell you how many times I've done that. I'm going to let it go back to this price, then I'll sell, and it never hits again. That's literally that killed me for so many months, if not years. And then to the point the trade was green, but I had to close it red because, yeah, literally so many people that like even 20% sells. If you have one contract, think about if you had 10 contracts, where would you start trimming if you had 10 contracts instead of one? That's the biggest thing that I live by. If I'm sized light and I want to average down, if it drops, like I'm not sized my normal amount, I'm sized only one contract to like test the waters. If I go up 20%, 30%, that's usually where I trim. So if I'm only in with one contract, I'll just take that and that's it. Because hypothetically, if I size 10 contracts, I would trim half my position, let the rest go. So if I'm only in one contract, I treat it like I have trims that I can use. I put myself in that uncomfortable position only because I would rather sell for a small profit than see myself go red. I don't know how many times, and I'm pretty sure when I say this, everyone should relate. If you went back to all your trades, how many times out of 10 were you up at least 10% green, but you end up selling for red? I mean, if you sold every position at 10%, I'm pretty sure people would only have like 1 to 2 losses for every 10 trades. And I understand, like, oh, if you get a minus 99% loss, that wipes out all your 10% gains. Well, you have to manage your risk along with just selling small for gains. The overall perception for me was when I started journaling, literally almost every single trade I had went 10% at least one time. So as I saw that, I would just sell the position or I would trim, and I never saw red trades. If I over traded, it would happen. So I had to go back and figure out, am I hoping to make more money? Am I not putting stop losses and those red trades are making me lose because I don't want to sell for break even? Am I like chasing more money that I think I deserve, even though I may not deserve that? Gil said, how do you determine if you should hold something long term? For example, I had a SPY call expiring 2 weeks out on the second day. I lost 25%, which is my stop loss. I sold, then it recovered. I would have made 30% a few days later. So, that's a tough one. Oh, let me think for a second. So long-term contracts, the hardest thing about them, if you're oversized, you kind of throw out all technical chart setups out the window. And the reason I say that is just because when you're red on a trade with time, whether it's the first day, the second day, the third day, the fourth day, it gets to you because you're not focused on, is the chart still holding? It's not moving as fast as I want it to. So I kind of want to sell just to be safe. Like, what if it goes more in the red? I've learned that when I add time to contracts, I have to enter at like the lowest risk possible for calls. So I will wait for a stock to hit like a major sell off, and then it's at like a major support zone for me. So I'm entering at a spot where it's like 80% chance it's going to bounce, and then 20% chance that it's going to come back down even more. That's why I don't take many trades as well, because I'd rather have one A plus setup than take 10 trades that are like what C to B plus setups. One solid trade can make you a return that almost 8 trades in a week can if you're selling for like those small percents. So when it comes to like holding long term, I would go back to see, like, are you oversizing? Are you sized light, but it's just hard for you to see red? Because for a lot of people, if you don't understand that like a swing trade usually goes red, if you're looking for that actual move, that's normal to be red. So if you have a stop loss, you may want to try and size lighter possibly. So instead of having a 25% stop loss, you can maybe size half the position, and then your stop loss would be 50%, and that would be the same financial loss on both of those trades, even though the other one is a massive loss percent gain wise. So if you size, let's say, 2 contracts and your risk is 25%, size 1 contract and make your risk 50%. That way, no matter what happens with the 1 contract, you're losing the same amount of money if you would sell your 2 contracts at a 25% loss. And that way, you may be able to get it back in the green. It gives you that conviction to hold it more, and you're not more so hoping for it to come back, but you're focused on the idea that you're sized to hold it longer, and that gives you that conviction to let the chart work its way out. AOD says, something I noticed today, a lot of times I have an opportunity to take a scalp profit around 15% and it pulls back and it hits my stop. So before I keep going, why do you have a stop when it's at 15% gains? And I'm going to read the rest of this while you respond with that. Then I re-enter, and then I have to re-enter if I want back in the move. I need to start taking that scalp profit and then take re-entry if it's still valid. But what makes it so difficult is I'm trying to work on holding my winning trades. Like today, for example, I had 433 calls on SPY at 0.66 entry. It hit 3.3 or something today. So hard to find the balance of taking profits, but holding winners too. I guess the answer is trimming and leaving runners, but with a small account, it's really hard to do that. So stop loss usually 10%. Okay. So the main thing I'm going to say, when you have a stop loss, and this is, I mean, I wouldn't, this isn't really like off topic from the, like the bullet points I have for the class, but this kind of correlates with like realizing you're not going to catch the entire move. I get the idea of the contract ran to 3.3. You see that at the end of the day. You see how the stock moved. Man, if I would have actually looked at the trends, I could have kept holding that contract, but I let a small pullback get me shaken out of the play. The main purpose of trading, and I say this a lot, and I hope it's not getting annoying, you're trading a chart. So if you're getting emotional from your P&L or the fact of I was up 20%, now I'm down 30%, now I'm back to break even, try sizing less so that like number doesn't mess with what's actually happening on your computer screen as those candles are forming. So many people that I've tried helping, when I tell them add time to contracts, the first thing they say, well, I can't make 500% if I add a month of time on a contract. It doesn't move fast enough. And I just tell them, so you have two choices then. You size the same way you have with less time, but you're risking a major setback on a loss compared to the win that may happen. If you can't emotionally hold a trade with less time, you need to learn with more time first, because it's the same as trading shares at that point. As the stock consolidates with a long expiration on a contract, that contract is not going to lose value. It's going to not lose that depreciation. It's going to hold. It teaches you to watch the candles. Like what you're seeing on my screen right now, if you played 0DTE and you bought calls at open right here on SPY or SPX or whatever, a pullback like this, you would have been down so bad, I would think, because it's basically a dollar move within about 45 minutes. If you played like AOD said he had what do you say, 2 weeks out? Where to say that? AOD, do you have a today expiration? That was the last person I read with Gil. I want to wait to see what he says before I keep talking. Did you have a 0DTE for that SPY 433? Okay, so yeah, this is a good example then. Like obviously I don't know where you entered. I can find it if I pull up the contract chart, but just for a visual, imagine buying 0DTE and you're sized, let's say a normal position, like 20% you got to get out, 30% you got to get out. If you would have entered it open or even anywhere in this chop where we had this pullback, or you bought in at like, oh, it's going to break the high of the day, I want to buy in calls at the break, and then boom, red candle, quick sell off just to recover. When you're trying to force an entry and even playing less time, the hardest thing about that, slight pullbacks, that contract is like you're up 50%, slight pullback, you're back to break even probably. And that's why for me, when I play 0DTE, when I play Thursday with Friday expiration contracts for like Amazon, Apple, or whatever, I always add time, because when I look at the bigger picture, like if I zoom out on SPY, I'm always focused on the bigger picture. We didn't touch this highlight, obviously, but we had a lot of consolidation right here. So me knowing, okay, historically, like there was a lot of just like chop, up, down, but it had that momentum. Understanding that it took us about 4 to 5 days just to drop this little amount. What if it takes that long to push back up again? So I add time based off how the move has, how the stock has moved based off like previous days, previous weeks. I don't want to try and just like quote unquote catch the big move with 0DTE, turn $50, or like for your example, turn $66 into 330. It is so difficult to hold a 0DTE when you can't afford to hold that kind of contract. It also makes it way harder when that 0.66 maybe goes to 1.2 and it pulls back to 0.8, and then you're thinking like, I just want to sell at $1 at this point. I don't want to keep holding. It makes it very like contradicting with the way you're thinking, when in reality the chart may still be holding, but emotionally when you see that P&L change, it's kind of like, I don't want to keep holding this. I just want to get out for break even at this point, or I want to get out at 50% gains. You sell and then it starts to rip, and then you're questioning, why did I even sell? You have to understand oversizing is going to kill you. Having that hopefulness of, okay, I was up 10%, now I'm down 40. I'm going to hold this because there's no way it's going to go to zero. Everything goes back to like the mental thought process. And you said something about trimming. So if you had one contract, this is when like what I talked about earlier really helps. You have to treat a position with one contract like you have 10. If you usually have 10 contracts and you trim it 20%, 30%, You have to sell that one contract at 20, 30%, or this is the hardest part, put a stop loss at break even, put a stop loss at minus 10%. And if that stop loss hits, you have to deal with it. That's like that. Trust me, it's diminishing. It literally upsets you. I'm trying to keep this PG. It gets you so upset because that stop loss hits, it takes off. So you have to deal with the fact of, okay, I'm going to sell for 30% and be happy, or I'm going to put a stop loss at break even. So no matter what happens with this trade, I am guaranteed to not lose money. Stop loss break even, I can't lose. Or the third option, which is what I personally do, don't put a stop loss in, let the chart work its way out, size light so you can hold the contract longer. And if you go in red, you already prepared for it. When I prepare for trades, I don't hope for the upside. I only prepare for the red side of the trade. That way, when it does happen, I'm not freaking out. I would rather freak out when I'm up 50% than freak out when I'm down 50%. Because when I'm prepared for the loss, I'm not like thinking I got to get out before it's too late. I already prepared onto what to do. And then when I'm green, obviously, if I'm only in one contract, I have to sell for 30% because if I had more than one contract, I would be trimming right now. I mean, if you guys that have access to the actual server, when Hassan trades Rippy God, he doesn't hold his whole position to 100%. He trims 15%, 30%, 40%, 70%. Why are you holding one contract past 50%? I understand like you want to have that one contract bringing a lot of money for your portfolio. The hope aspect is going to kill you long term because the one time it doesn't keep going, you may average down in the red. You may never sell and a contract goes to zero, and then every trim you took at 30%, it just wipes out everything. You have to find that center ground. Stop losses are important, and the biggest way that I teach stop losses, when you're up 30%, you have a choice. You can sell right now for the game, or stop loss break even. At the worst, the trade is dead. Like you don't lose anything. It's a dead trade. 0% gain, 0% loss. That's the whole choice you have to make. Are you content with being up 30, 50% and then putting a stop loss at break even and whatever happens, happens? For me personally, it would upset me. I'm still trying to keep this PG. It would upset me when I would put a stop loss at break even and I was up 80% and I'm just like, I don't want to sell yet. I'd rather go for like 200, 300%. Then it pulls back my stop loss and it gets me out. And then the trade never goes back. Like, and people always think about, let's see what happens now that I'm out of the trade. Like I've had chances to sell at 100%, 150%, and I haven't done it. And then it pulls back. I sell for a small loss. Maybe the stop loss at break even gets hit. That's when the whole reality hits you because now that you're not in the trade emotionally, you can see it for what it was. You had a chance to sell for a very solid gain. A lot of people would take that at half of what you were up at. And you have to realize that so many people would like literally kill to be in your position. Being up 80% in a trade, there's probably people that have never even been up 50% before because they sell so soon. And you're acting like 80% is, well, that's not good enough for me. Yesterday, I missed out on 500%. I'm not going to sell 80%. Like, think about that. 80% on one trade. Even if your size one contract, two contracts, I don't care what it is. 80% returns on an investment in one day, if not an hour, 30 minutes, 2 hours. That's unheard of. So you have to understand the logical perspective of this. And it sucks. Like, trust me, I get the idea of missing 500% or days like today, missing 1,000% gains. It sucks. But the best part about that, this is not the only day this is going to happen. And I promise you, this is not the best day that we're going to see all year. You have to be prepared. You have to have a system, stop loss at break even, whatever happens, happens. I'm going to see if it holds trends with indicators. You have to figure something out that works with who you are and let the system work its way out. Don't just enter and tell yourself, I'm just going to hold. Let's just see if it keeps going. I'm up 100%. Let's see how much higher it can go. What are you really basing this off of? Because all I think about is the hope. You're hoping to make more money. Where's the chart's TP at? PT, where's the price target? Like, where do you want to see the chart go to? There's no such thing as, I'm just going to hold it. Whatever happens, happens. Okay, well, if you've trimmed already and you have like one contract left and you've already locked in profits, like be my guest, that's perfectly fine. But if you're sized one contract, what are you really trading for? Like, are you just trading for the excitement, for the adrenaline rush, for the money? End of the day, I trade because I love what I do. Like, when you find a system, you're unstoppable. Limit losses, take your gains when you can. A year from now, you're sitting in a whole different environment. But so many people want that environment next week, next month, and it's just not going to happen. Because if it does, more than likely, if you don't understand how to process what just happened for you when you've never been in that situation, you're going to try and make even more money off of what you've never had before. And then sure enough, that money's blown. You're mentally like gone. You have a small account again. You're trying to make that hopeful play back. You're having those entries of I'm going to hold this and get my 2K back that I just lost. It's so draining. And there's just so much that you have to, I don't want to say comprehend, but just visually like see it, because there's not much comprehension to do with this. Like everyone knows how you are if you actually think about like what can I do with training? What can I do? What's my strong suit? What's my weak spot? Everyone has to figure that out, because end of the day, I can't really like install that in you. Everyone has that thought like in the back of their head, don't sell right now. Just give it a few more seconds. Why do you want to wait? Like what are you really waiting for? Like, is it the chart? Because if it's the chart you're waiting for, you want to have that thought process of let's just see what happens in a few seconds. If the price target hits, you got to get out. If you get in on a call and it's coming up to a heavy resistance that you have charted, sell at the resistance, not the whole idea of, oh, if this resistance breaks, it's going to keep running. I guarantee people have done that before. It's contesting high of the day. You're up 30-40%. You want to see if it breaks before you sell. A rejection, you're back to break even. Man, I wish I would have sold when I was at high of the day. Everyone goes through stuff like that. So you have to either accept it for what it is, or you have to live with what it could be. And if I were you, I'd want to live with what it is. Like, I don't want to look back and say, man, I should have sold at 50%. Now I'm red on the day. I messed up. People chase what they lost at that point. They're hoping to get the money back. They're not focused on the setups. Like, everything comes down to just having no emotion. You're trading a chart, you're trading price action, liquidity grabs, whatever you want to call it, decompression on candles coming in and out of it. You have to understand what you want out of this. Let me see what you guys were saying. AOD said my first entry was about 10:15 Eastern on the 5 minute. Second entry was 11:15 on the 5 minute. Let me put some levels on this to see. Am I on SPY? Yeah. 10:15, and that was, oh, you got in good. Solid. 11:15. This better not be the high. Pullback. Good job. That's not bad. If you look at it, it's actually off trends, so that's solid. When you trade, I'm just gonna, if you guys have questions, you can type them. This was literally like it for me. This was a good day to talk about this lesson, because I feel like anyone that traded today, whether you win or lost, you definitely could have made more money. And I'm pretty sure everyone is nodding their head. They're thinking, man, if I would have held that, if I would actually executed when I knew I should have. Today was a solid day, but it's not going to be the last day. So look at what happened today, find a formation, look at the consolidation at open, look at how it had a slight pullback. That was a nice entry point for calls if you missed the initial. So many people want to wait until a breakout happens and then buy calls. Contracts are juiced. Why not wait for consolidation, see how it forms? Do you guys have any statements, questions? I want to do like a short Q&A if you guys have anything you want to say. Part of my problem is P&L watching. My advice for P&L watching, don't even have it pulled up when you're in the trade. Don't even have it pulled up when you're in the trade. As hard as that may sound and is like scary, my biggest growth was trading without the P&L on the screen. I don't know how much I'm up. I don't know how much I'm down. I'm selling based off the candles on the stock chart. And I get it. How do you do that? I would literally do that and sell market. So if I would have hypothetically, let's say I enter calls at the top here and we pull back heavy, the minute that we would have broken out of whatever I was watching, let's just say this trend right here, I would sell when the trend broke on market. Whatever I sold at, that's what happened. The biggest thing that changed was when I figured out, why am I selling on the trend breaks when I should be buying on the trend breaks? So I would slowly readjust my process. I wouldn't change anything. I would readjust. I'd buy at the bottom. Then as it moves up, it's like, okay, so when we contest this high that rejected last time, I'm going to sell on the break. Breaks out, I sell market. Now I go back and see how much money I've made. I don't focus on, oh, I'm only at 30%. This breaks out, I could be at 50%. It breaks out, oh, well, I could go up to 80%. I don't even know what I'm up. So I'm just getting that, like, I'm trying to cuss. I'm just getting out. I'm not focused on, let's see if it can go higher. When levels break on the chart, I am getting out. That is literally how I trade. And if you guys have noticed that, that's all I do. Like, I enter off levels, I sell off levels. I enter off candle wicks, I enter off the liquidity grabs, whatever you want to call it. I'm only going based off what I see and not the fluctuation of what my trade is doing. Like, that literally kills the entire purpose of trading for me. And that's just how I am. I have to watch the chart and not my P&L, because my P&L messes me up so bad. What do you foresee the market doing the rest of the week? QQQ. So I don't see nothing, because Powell talks tomorrow, right at market open. So I will get back to that answer around noon tomorrow, if that works for you, Gil. Literally, Powell can literally cough and the market goes one way. Like, I don't trade any news releases. I don't trade no talks, the president talking, FOMC. I hate that crap, because all charts are invalid from my perspective. Other people will probably say, like, oh, it's all priced in. Okay, I get that. I don't want to trade none of that bull crap. So I have no foreseen right now, but overall, I think we're going to push. I just don't know if we're going to, like, sell off first on tomorrow open, then push rest of the day. But I am bullish as of now until we break. Let me pull up this real quick. I'll tell you what level I want to see break. I'm pretty sure other people should be watching the same thing. Dang, I gotta watch the 4 hour, I think. There we go. So literally this level right here, it's basically 430 break on SPY. 430 break on SPY, I will be bearish at that point. Until 430 breaks below and holds underneath, I am not bearish until that happens. What time frame should be used when in a trade to avoid the fear of jumping into conclusion? I personally, I never go below the 15-minute. The 5 minutes shaky, the 15-minute I like a lot, because the intervals of the candles for the 15, it gives you time to watch, and it also doesn't make you wait too long. I love the 30-minute, I love the hourly, but the 15 is like my go-to, only because when I've back tested a lot of stuff, and I'll see if it works with SPY today. Back testing is important, you guys. I know it takes time, and it's very annoying, but you would be in shock when you see correlation with, like, the time of the day when candles start forming. It's kind of crazy to actually watch. So stuff like this. So this is, like, obviously I didn't, let me go to Q actually. Hang on. I played Q so I can actually talk on why I did what I did. So this huge candle on the 15, obviously it was green. We started the candle right here, right where this highlight is. I'm going to make this, let's go this cayenne color. So where the candle started right here, where this color is, it literally pushed straight up on that 15-minute. If we switch to the 5-minute or the 1 minute, look how bullish this looked at open. Like, look at this, green, 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 huge wick green, then it pulled back. I did not want calls, obviously. I knew puts if it hit this area. I was on the 15 when that move happened, only because it gave it time to really work its way out. And sure enough, this 15-minute candle, straight reject. There was no, like, hold in the middle. Once it hit the top and started to pull back, and it actually broke the opening print, it straight flushed. So I sold right away, because first, low on the day broke. I'm selling it low on the day, because what more am I looking at for pre-market? Like, there's no pre-market low anymore. When this candle hit the lows, there's no other price action for the day of. So I'm hoping for a lower drop. I don't do that crap. So I was pleased. I sold. I made money. If I held this contract, guess what? I would have lost everything. Does that make sense? I sold because low on the day broke. Logically, I can re-enter. It usually pulls back on the 15. 15-minute gives it time. Those wicks on the pullback make me second guess for entry. Any advice on how not to second guess the chart? So if you ever question wicks, always focus on what the zone is. So like SPY today, we ain't hang on, no, not SPY. Let's see what Tesla did today. Okay, let's go to PayPal. I'm trying to find something that is working with what we've done already. This isn't good. Did Neo run? I think Neo was up like 11%. Where's Neo? There we go. Okay. Let's see if this will work out. So the idea of being scared on a position. I had main support here at the 8.8 area on Neo. And obviously that was going based off the previous rejection. I want to see that hold as support, and we did not hold. Logically, from a lot of retail perspective, when they see a support break that they have charted, they want to go puts. When this happened, I didn't even think about like, oh, it's going to keep dropping. It's going to keep dropping. Where is the next support? And sure enough, if you look, the next support was right here, which kind of aligns, which I don't want to be like, oh, that was perfect because it already happened. It's easier to find it that way. But logically, as supports break, I wait for the next heavy level. And around here is the next heavy level. So much rejections. So that is like what I look for. Just because you wick and it may scare you or second guess your entry, focus on like where is the next point that could show strength. And also keep this in your head as well. Buying calls at low on the day, your risk is so small. I'm not saying just buy calls because it's trending downside. I'm talking about like zones and trends. As a stock is coming down to a zone, calls are going to be the cheapest they could possibly be. And if you enter calls and it keeps dropping, you get out right away. I mean, it's that simple. If you need confirmation to buy calls, I would personally wait for trends to form and then enter based off the trends and let the contract kind of sit and like calm down a bit. If I switch to the 1 minute here on SPY, I'm going to see if this looks a little bit better. Okay, yeah, this is going to be a perfect example. So like hypothetically, I don't trade the 1 minute, but it's easier to see. I'm able to look at the 5 minute candles and just depict what a 1 minute candle looks like inside that. So focus on opening print. We had a double bottom, another red candle hit here. So you're thinking this is heavy support. The minute this support breaks, I guarantee people are thinking we're tanking. Like SPY's gonna drop so heavy. Okay, we got a bottom, we're pushing. Don't enter, like this is just me talking. I don't enter yet. I want to see if one, we pull back to this support again from the opening print, which we didn't obviously. That's when, okay, we pulled back, we bounced. I'm looking for the next trend setup. If it never happens, I never enter, but that's how patient I am with setups. If you're looking just for a solid entry point, you can basically use consolidation within the highs and the lows. So all this consolidation in the middle compared to the high of the day and the low on the day, which let me just put these in color coordination real quick. So we got low on the day in red right there. Like at the point, at the opening until 10 o'clock, I'm just putting these levels here. And the opening price we'll put right here. So you have two zones. And then if you're watching the 1 minute, the 5 minute, whatever you prefer, all of this in the middle is chop. You should not enter off this chop. That's just how I personally do it. After this pushes up, we reject, we come back down. We're back in the middle. At this point, for me, I like to wait for a lower point. But if you want to find like that, like I got to get in before it's too late, you have to go off trends. You have to use an indicator that you personally like. You can't just let candles formation like rush you into something or rush you to sell out of it, because that's going to tear everything apart. It's going to ruin the execution, possibly the game plan. That's when I take a farther out candle to view the situation. If the 1 minute is looking horrible for you and you're like freaking out, go to the 15, go to the 5 minute, find something that's going to calm you down so you're not forcing an entry. You're letting the chart form before you really buy in. And if you do stuff like that, this is a lot more soothing for me personally. If I don't enter, I don't enter. So I use bigger time frames on the candles, and that kind of helps me not like second guess an entry. It gives me time to really think about what's happening. I'm able to look at zones and wait for these 15s to fill and maybe give me an indication as to what could happen. It's hard to really explain this without like one topic on it for a day. And this is something I could throw in here at some point for you guys. Appreciate the thorough input, man. Your mental game is top tier. I appreciate that, bro. I'm still working on it. I shouldn't say it took a long time. I'm still working on it. I stay away from all that nonsense too. It's not worth the mental capital. Literally destroys everything. Uh, Elson, you said QS or Spy. What's that from? My bad. That was like 10 minutes ago. You said that. 80. Do you think Heiken sheet candles help to see trends? I personally have never used the Heikens before. I know people that do, and it's hard for me to speak on that because I have not done it before. If you would like for me to, I can research it and see. But from my experience, I have never used the Heikens ever. And I don't really even know I know what they are, but I don't know the exact terms as to how they're differential with regular candles and then the Heiken. I'll take one con size for 0 now if I do FOMC. FOMC, bro. I don't even do that. Oh, you said Q 357. Let me go back to Q real quick. 357 on Q. That's like the pullback, right? Yeah. Yeah, that's the low from yesterday. That's the main. I wanted to get calls on Q if we drop that low, only because, yeah, this is what you're talking about, probably, Elson. This right here. That right there was my entry point today for calls, but we never dipped. That's why I look for a reject on the put side, because this is the zone we're in right now. Obviously, we're out of the zone, but like what Jarvis posted on his channel today, we are at a reject for Q. We hit the reject, now we dropped after hours. So we're zoning once again. If you like this chart, this is all I do. Anything in the middle, I don't touch. As we come down, I'll buy calls. As we push back up, I'll look for a rejection again. Risk is lowered when I play that way. That's why it helps me. How long do you recommend back testing? As long as it takes to have a solid probability setup, it gives you a general idea as to how successful and or how red or bad it could be. For me, I like to take minimum 3 months every single. Like, you don't have to back test the day of. It's just going back and testing stuff out. I have a lot of different trading stuff I use, trading styles with EMAs, scalping, swing trading, using specific indicators for those kind of like control to keep holding plays. When do you know it's sold? What do you mean by that? When do you know it's sold? iPhone 3. When do you know it's sold? As in like selling off, you mean? Oh, solid. When do you know it's solid? Honestly, it's just iPhone 3. It's just trusting the charts, honestly. That's the hardest part about trading, because a lot of people, they need confirmation. They need that, like what you said, a solid indication as to why you're making that happen. For me, what I've learned when I'm looking at Q for the rejections, I was looking at this for the 15-minute, and looking at the 15, there was not much consolidation when this zone touched for support. It would come down, go back up, come down, go back up. So when we rejected there, and of course the buying pressure was massive, the wicks were like, this flew. When this price hit, it flew up like 50 cents and not even, let me go to the minute time frame and see how fast that was. I mean, because I was watching the play on the 15, and that wick hit so quick for no reason. Yeah, look at that. Look at the volume candle down here. Get out of here. What are you doing? This wick, this is on the 1 minute time frame. Look at that wick. This would scare people to buy puts. This is what I want to see happen, because if I enter at the top here, the best part about entering up here, first thing, the put IV is going to be so light, because that quick fluctuation, it literally kills the premium, which means I get in cheaper. So if it does push heavy, my first reaction is it's going to consolidate. If I'm wrong, I'll have time to get out if it does hold. Usually when volume hits that quick, there's always a pullback. So you have time to process it. When I'm on the 15-minute and I see that massive push, bro, why does this keep happening? Someone help me figure this out. When I saw this massive wick on the 15, literally the first thing I told myself, I'm going to wait to see where this candle closes. I'm not selling until this 15-minute candle closes and the next one forms. When this reject happened, that original thesis was out the window, because we hit low on the day. Right when this dropped like massive, I was on my order slip. I was ready to sell at any point. I was content already because my entry was perfect. Like if I would have entered puts where this highlight is right here, it would have been a whole different story as to where I would have sold. But me entering puts way up here, right when we rejected right away, I'm thinking my execution was dead on. Like that execution was perfect. I don't care how much money I make. I don't care where I sell. I have to sell green because the execution was good and I can't let this go red. I don't care about making 1,000, 5,000, 2 cents. Execution on this entry for me was perfect, especially when I don't trade open. This is what made me realize I entered solid. The trade didn't consolidate. The 15-minute candle kept rejecting. That massive push made me have that I can't think of the C word. The dang. Like it made me for sure that I wanted to enter this put because when I saw that massive push, it didn't keep going. What made you enter at that level? So no, not that C word. What is it? I'm gonna think of this like at midnight tonight, and I'm gonna text in the group like this is the word I was talking about. All these liquidity grabs, these sell-offs. Yeah, conviction. Yeah, conviction. Donnie, is it going off historical price action in this area? If I zoom out just so you can see the bigger picture, every pullback bounced, bounce, bounce, bounce. Once we broke below, I'm looking as for a support to resistance flip, which means if this pushes back up, I'm taking puts and I just want to get that quick play. If I would have entered puts and that 15-minute candle closed and kept dropping, I already sold. I would not be upset only because I got in puts at the perfect spot. I used historical support as my projection zone. That is why I entered. That's why I have this level here. This is why I chart based off zones because end of the day, I'd rather wait for the best setup than force a trade and then get shaken out. And then end of the day, I realize I should have never taken that trade. Uh, Super important for me. My entries allow me to keep my stops tight, as in enter right, where I'll either see my move develop or fail on the chart, looking for buyers, sell, setups right at my level, skipping out on the mid-air trade, saving. Literally, that's what made me more confident. Not even the fact of being profitable, but as a trader, and as you guys can tell, like I'm teaching people because I trust what I do and I trust who I am. Like trading all this stuff in the middle, it gives me a headache. I don't I don't mind it, but I don't like it. If I can enter at a better spot or wait for a better entry, like if you miss calls, you had a chance to get puts. I get the idea of the day of like it's going green, green, green. Why would I get puts? You're going off historical reasoning, historical chart setups, technical analysis. So do you think do you think about the setup after the market opens or are you prepared for it earlier? I charted with you guys this past weekend. Everything that we charted, you can use. So like Meta right now, if Meta pulls back down to 285, you can buy calls right there. Going off rejections historically should now act as a resistance. If we go to let's look at Nvidia, that had a huge tank a few days ago. We're at support on Nvidia after hours. So this is looking solid for calls. Obviously, news could affect that, but I'm prepared. Like all these levels are going to be used again. So this 420 level on Nvidia, if we push up, this can be a rejection a month from now. So all these setups I keep on my charts. If you play stuff like reoccurring enough, you just memorize levels in your head. Like Netflix, I can tell you all the levels on the top of my head. Amazon, I can tell you all the levels on the top of my head. Uh, SPX, not as much because there's so much going on. But when you play something so much, you just know what's going to happen. You know what to wait for. You're not going to force a setup. When you understand a stock and the way it moves, you know where you should not trade it. And that's what makes you so good at it. Nvidia is at 408. Yeah. I mean, Nvidia right now, this is the zone that I have for like calls. And of course, we had a sell off at open today. That would have been a nice entry if I would have noticed that. Pullback sent right off of that zone. Yeah, I saw Biden, the news came out. AMD, Nvidia, MU, AMAT. What's the other one? There's another one too. Uh, And you just set alerts for levels, right? Because it's so hard to keep up with everything going on during the market. So Alex, the biggest thing that I've learned from me, I watch a very small amount of stocks. I watch stuff from every sector. I don't want to get too much into this because this is like my little secret that I do for me that I've figured out. I don't watch 30 plus stocks. I have the same stocks I look at every day. If I see the night before there's not much moves that could happen with any of them, I'll look for a possible other play to like substitute in for something else. I have backups, but my main go-tos: Netflix, Amazon, American Airlines, Ford, SPX, ExxonMobil, Chevron, AMD, Apple. Like I have the same stocks I play every single day because I know them like the back of my hand. I know when to buy. I know when not to buy. I know when my highest rate to hit is going to be. I know when the lowest risk will be for entry. It makes me win. And a lot of people are like, you don't get bored trading the same stuff every day. I don't get bored making money. Like, why would I get bored? That's work. The better you are at something, the more you should do it. It may be boring, but if it's successful, there's no hesitation in why you should be doing it. Watching one stock, like I wish Coco was in here right now. He watches Amazon every single day. When Amazon hits the lowest he needs, he enters and he makes bank. That's the best way to trade. I mean, what Mr. Trade just said, trading is supposed to be boring. If you get like adrenaline rushes off of trading, you're just trying to make stuff that you may not even know how to do. Like you're just trying to get extra. If it's runners with the trade, that's fine. But entering and holding the whole position, if you like get anxious, you get emotional, you get pissed off, you get happy, you're not trading for the right reasons. When you enter based off setups, there's no emotion because you know what's going to happen no matter which way that position goes. That's the best part about patience. So is there any more last minute questions from anyone? I got to get this wrapped up pretty soon. Like related to this topic. If there's nothing for this topic, I can pause the recording. We can talk for a little bit longer, but just regarding Hopium, holding trades, stop losses, any questions along those things. Stop losses, selling trades, not holding too long. Great lesson session. Yeah, you're welcome, you guys. You guys are always welcome. I was gonna say, Roy, what are you talking about? If we break 400, are you shorting 400 on Nvidia? I don't trade Nvidia, but I can tell you what I think if you want me to. Yeah, I got you. Actually, wait, I have a buddy that trades this. Let me check my. Let me pause this.